Yo, what's up, everybody? This is Dante Cook, your host of Bitcoin Simply, and I wanted to not do a super produced video, but just go through the year, give you some of my thoughts, and give you a breakdown of what I'm looking at going into 2026. So the big thing for this year that we want to talk about is obviously the flat price. Bitcoin has been down about 7 to 9% year to date. And honestly, it's been a bit disappointing for many people. But when you zoom out and you look at the larger picture of what Bitcoin has done over the last 16 years, well, it's been the best performing asset in the world 12 out of the last 16 years. And it has an annualized growth, compounded annual growth rate of 121% when you zoom out to that far. So when you're thinking about Bitcoin and you're looking at the price of gold and silver, saying there's a silver short squeeze, remember that silver produced a 2 to 3% annual return for the last 20 years if you held silver. So let's not go ahead and say silver's been the best performing asset. Let's not confuse short-term price momentum for long-term investing wisdom. The same thing with gold. There was long periods. Let's talk about 1990 through 2005, where gold did absolutely nothing. So you have to look at, are these assets having their time in the sun because there's a commodity short squeeze, because it's a risk off season, because we have high interest rates with slow growth around the world, with increasing debt from sovereign wealth nations to individuals? Well, people want physical things that they can hold, let alone, they say that they can hold gold, but they're not actually physically holding gold. They're holding an IU from some exchange that says that they have the gold. And that's exactly what we're seeing in the silver market right now, specifically with Shanghai, specifically with the gold market in Shanghai, where they're actually allowing people to take physical receipt of the gold that they have in storage. This caused the gold price to move from the high threes to $4,600 to $4,700 an ounce, which we see now. And one of the things that I like, I'm not a big Ben Cowan fan, but he hits us on the nail right here when he says that we don't want Bitcoin to trade like gold, because if Bitcoin traded like gold, a stable asset that grows 3 to 5% a year and sometimes has a 20% year, then nobody would be interested in it.
Bitcoin has never traded like gold, right? And a lot of people think it's digital gold, but it's never traded like gold. If it had traded like gold, no one would care about Bitcoin right now, because it would have meant it hadn't done anything for the last 15 years, you know?
We don't want it to trade like gold.
Right, because we're more often in risk on times than risk off. So it makes more sense to want it to trade like a risk on asset, not like a risk off asset. It's just that when you go into risk off times, certain things like gold can rally for really long periods of time. A lot of times the gold bull markets can last like 10 years. You know, like this was a 10-year bull market from 2000 until like 2011. And this was a 10-year bull market from 1970 until 1980. So gold's rallying probably just because of all the macro uncertainty, all the mistakes that you could perceive that the Federal Reserve is doing, the fact that there's no fiscal responsibility at all, right? Like everyone just wants to inflate our problems away, print more money. It's going to likely cause the bond vigilantes to revolt at some point and send the long end of the yield curve higher. I think that, look, when you're in times of uncertainty, people want to buy real physical assets and they're not as attracted to more dubious paper assets or just more speculative things, because things are uncertain, you know? And the reality is gold's been around forever. You know, the market for gold has been around far longer than any other thing that we've created, right? I mean, the market for it existed for a long time. Over a long enough period of time, we can look at the gold chart and see that it just goes up and to the right, you know?
I have 4 young kids, and let me tell you, there's volatility in my house all the time. If there was no volatility, then these kids would not grow. Arms, bruises, scrapes, heads getting split open on the stairs. That happened last week. If they didn't have this sort of volatility, then they would not grow and mature as people. The same thing is true for asset classes. They need a time to mature. They need new investors. They need new products built around them. And when I look at Bitcoin's flows, when you look at IBIT's year-to-date flows, I think IBIT was a 6th or 7th highest performing ticker in terms of inflows or year-to-date increase in flows, despite it being down 9% year-to-date. So what does that tell me? That tells me that people are not looking at Bitcoin as a speculative trade or a speculative asset. All of the other assets on this chart are in fact green. And so what you have to understand is that this isn't a move about speculation. This is a move of institutions, and the smart money is moving into Bitcoin. We saw JD Vance, we saw Scott Bessent, we saw Donald Trump, we saw Mike Selig, we saw all of these people saying Bitcoin is going to be the pillar and America is going to be the crypto capital of the world. So you have to keep that in mind when you're thinking about investing for the long term. Is America going to be the leader in internet? Well, that's what Alan Greenspan said in the 1990s when he let the economy run hot. Scott Bessent just talked about this and our need to reestablish ourselves as an industrial superpower. So Scott Bessent is going to, with the power of the Fed, and in May of 2026, through this administration, they're going to implement a new Fed chair. And when that happens, inflation is going to be the story of 2026. And when inflation happens, what you need to understand is that you need assets that outpace inflation. Silver, commodities in general, they are great predictors of inflation. But when the times of inflation was happening in this country, well, the things that you needed to buy were actually growing faster than the rate of return that you received in those asset classes. They typically catch up in short periods of time. And so what you need to understand when you see Bitcoin lagging behind gold and silver is not to panic. It's to understand that when inflation actually does run, when the Fed does print, which they have to print, you have to understand that Bitcoin is going to be the most superior asset. I don't care if people look at it as a risk on asset. I want the fastest horse in the race. The next thing that you have to understand is that this administration has been taking steps in order to combat the debt problem that we have. One of the things that they could do is they could reflate gold. One of the things that they are doing is that they're growing the GDP. One of the things that they are doing is that they're shrinking the deficit. But the major thing that we need in this world, in this economy, is new assets that other countries don't have, which we have a lead and head start on, which for us is infrastructure. For us, it is energy. For us, it is our Bitcoin strategic reserve. Because if we inflate gold, well, what advantage does that give us over China or other countries that have just as much, if not more, gold than us? It doesn't give us a relative advantage. That's what you have to think about and understand if the U.S. government was going to reflate gold to $10,000 or $20,000 an ounce. Sorry, Luke Grumman, I don't think that that's going to happen. What they need to do is create a new asset class where they have a material advantage. And right now, that is AI, that is energy, that is infrastructure. And right now, from a strategic reserve perspective, that is Bitcoin. So that is where I think that they press the pedal and they try to create a new sort of revenue stream for what they're going to do. Scott Bessent talks about shrinking the deficit from 6% to 3 to 4%. And that's going to happen through growth. Grow. New assets, new money, new parts of the economy. One of the other things that you have to think about in 2026, when the Genius Act passes, what's going to happen is there's going to be a major shift in capital flows out of retirement assets and other vehicles, which account to about $45 trillion. If you're looking at real estate, you're looking at about $300 trillion into this $1.7 trillion asset class, because they realize right now, real estate is in a pickle. Real estate is at a point where new home buyers can't buy them. They can't afford it. People who have 2% interest rates from COVID during that time are not going to trade across for the same asset class that they could have, even if they have equity in their capital accounts. The other thing that's not going to happen is boomers aren't going to move out of their homes. And because if you've ever read The Fourth Turning from Near How, they are a little bit of a selfish generation. No offense, boomers. What the problem is they've actually earned most of their income and their wealth not through the growth of their salaries or those other things, but because of the gap between their expenses and what they were able to earn and save, and the growth in the stock market and the economy from 1980, when interest rates were 19 to 18%, down to the early 2010s when they were at 0%. So anyone who owned assets benefited materially in an outsized way. And so what we're seeing is the hollowing out of the middle middle class in the economy. So what they're going to see, what they're going to realize is that real estate isn't a viable option for people to gain the American dream or to earn wealth. They're also seeing that their retirement accounts are now filled heavily indexed in stocks like Nvidia or companies that need to produce 200 times price to earnings in order to earn back the return on that particular stock. The Mag 7 dominates the flows and the returns in the stock market. And so a lot of people, investors, savvy investors, are looking to diversify out of those classes into other classes. They also realize that bonds are not going to outpace inflation. So you have this asset class that received 40% of a 60-40% portfolio that's now going to move into other asset classes. And I think Bitcoin is going to be a big beneficiary of it. One of the major things you also saw in 2025 was companies like MicroStrategy stamping Bitcoin treasury companies as a strategy being a legitimate thing. They created 4 products: Stretch, Stream, Stride, Strife, Strike, and have taken about $9 billion worth of inflows. That is unprecedented in the history of creating new products on Wall Street. And what you have to realize is when the market understands that they can get great returns, like Yale, like insurance companies, like other people with endowments that are looking for steady streams of returns, when they allocate out of bonds into other asset classes, collaterally backed asset classes like Bitcoin, well, that's going to be trillions of dollars in flows. And so MicroStrategy is already beating them to the punch. They're giving them an equity. They're giving them a preferred dividend strategy to invest into that thesis. A lot of capital is going to flow there that otherwise would have flown to bonds or other assets. I want to thank our sponsors this year, Ledn. They've supported this show. They've supported this. I know we read these ads every single time, but they are truly a great partner. They've been one of the people that have helped to make this show possible. We've grown almost doubled this year from 60 to 70K at the beginning of the year to 115,000 subscribers. Thank you for riding along with the journey. So support our partners at Ledn, the leader in Bitcoin-backed loans, allowing you to unlock liquidity in your Bitcoin without selling your Bitcoin. Never sell your sats. Do so without a credit check, with loans starting at just 12.4% that aren't rehypothecated, that are held in cold storage. That's how we do it. Look at the address and the platform for yourself. They've never lost a single cent or sat of customer money and are been the leader in digital assets, doing the first proof of reserves out there for a digital lender. Ledn is a company that you can trust, and that's why they support us and why we picked them to sponsor this show and why we trust them with our community and with our audience. Go to learn.ledn.io/simply to get started. Another partner that we wholeheartedly trust. I'm a coach. I was an athlete once upon a time. And when I want to grow and get better in a certain area of my life, well, I hire a coach. And that's what you can do with the Bitcoin way. They will connect you with a coach to help you to learn safety, sovereignty, privacy, security with Bitcoin the right way. Schedule a free 30-minute consultation with the team at thebitcoinway.com/simplybitcoin. You won't regret it. One of the major things that I'm looking for in 2026 is that Bitcoiners continue to be a people of resolve. They continue to be a people of conviction. And one of the things that I created in 2025, like, Bitcoiners are truly some of the most amazing people that I've met in my life. I actually met a Bitcoiner who reached out to me, and he said that there's a barrel out there of a 10-year, I can't say the name of the company, but it makes a certain gold type of bourbon that has a barrel out there that was commissioned for one of John Wayne's sons. It ended up on the secondary market, and that's how we created this thing called Laura Bourbon. This is a 10-year bourbon that we created specifically for Bitcoiners. We created the Protocol series. It's super cool. We're going to commemorate some of the most amazing moments in Bitcoin's history, and we're going to stamp them with a proof of work type of juice that can't be faked. And this one is called Laura. It comes from Michael Saylor's moment with Laura Shin in January of 2021, saying, if you have the superior asset, it's going up forever, Laura. One of the cool things about bourbon is you see some people that drink it, you see some people that hold on to it forever. The same thing can be true for Bitcoin. You can HODL Bitcoin forever and not spend it because it's money and it grows in value. You can also spend it. You can spend your sats because they're going up in value relative to other things. And so you can drink it, you can hold on to it. It can be a commemorative thing. And that's why we wanted to create it. We wanted to commemorate that moment. We wanted to say thank you to all of the people in Bitcoin who make this such a special thing in a special place. And so there's 210 bottles. Sorry to the people that went on there. We released 50 in the first batch, and literally they sold out in like 2.5 hours. I'm not making any money from this, but I wanted to do it as a cool project in line with another Bitcoiner who wanted to put something cool out into the world. And that just goes to speak to the Bitcoin community. We're people of conviction. We're not speculative traders. We're not people that are looking for the greatest spike in Bitcoin. You know, Bitcoin went to $112,000 on Pizza Day in May earlier this year. It went to $126,000 in October. And people still continue to buy with conviction. And that's the thing about this community. It's not going to fade away. It's not going to go away easily. It's not going to be easily co-opted by Wall Street, because we're going to call out and we're going to call the people who we elect and give responsibility to show the receipts for what we've given them the power for. That's what the Bitcoin community is all about. It's not just number go up, it's freedom go up. It's a mindset shift. It's a change in how you think about the world and how you think about the future and storing value, saving more, not spending as much as you earn, thinking about future generations and not just what's in front of you. And that's what I'm excited for in 2026. Sure, we had a flat year, down 5%. Okay, are you an investor or are you a trader? And I know what kind of person that I am. I know what kind of future that I want. And I know what kind of assets that I want to invest in that align with those beliefs and that behavior. So, thank you for rocking with us in 2025. It's been such an amazing year. And I think 2026 is going to be an extraordinary year, and one that's going to be defined by inflation and the inflation trade. Look out for that when you come up. And one of the ways that I'm looking to get involved in Bitcoin, I personally haven't stacked sats through mining, but I will in 2026 as a tax advantage strategy where I can depreciate a state-of-the-art mining machine, earn sats while I sleep with no middlemen through a company like SAS Mining. And I can depreciate the total value of the asset in the rig through Section 179 and other tax strategies and earn this Bitcoin while I sleep. So I'm going to be working with SAS Mining. Use the QR code if you want to get started as well. Thank you for rocking with us this year. Thank you for rocking with me. As always, this is Dante Cook with Bitcoin Simply. Happy stacking.